CNBC-TV18, embarking on a quarter century of excellence.
Welcome back to Closing Bell. Well, it's that part of the day when Nimesh joins us to tell us what is he picking up in terms of dealing room chatter. Nimesh, fill us more.
Hi, Nigel. Again, it's a day of consolidation, but the broader markets continue to outperform. In terms of flows, again, it's a mixed day because there is a small market at close. Sell flow as well at a leading FIDs, but broadly the flows are biased towards the financials, and within financial is the private banks which are well bid for the third or the fourth day running. So clearly now from here on, there is a bit of bias towards the private bank stocks, at least from the larger institutions. That's the general sense I'm getting in. In terms of sectors, OMCs, after a big move in the last many days, that has seen some bit of profit booking today, and largely there are fears as well that maybe you'll see some retail fuel cuts. So OMCs are under pressure, but broadly from a flow perspective, it's mixed. But it's the financials which are well bid from the larger FIs, even in today's trade.
Nimesh, so that's the overall sense. In terms of specific stocks, so what's on your list?
Well, as I said, the private banks are well bid. The first name on my list today is Kotak Bank. It's been buzzing in the last few days, but again, in today's trade, there are very strong buy flows is what I understand. So expect high delivery volumes in Kotak Bank, and looks like some serious investors, FIs, are turning buyer in Kotak Bank. So that's the first one. The second is I'm expecting a couple of QIPs this week. So that includes the names like SW Solar, which is likely to come out with a QIP maybe today or tomorrow. Even J&K Bank is lined up for a QIP this week. So maybe even that will come up in a day or two. And the last one is Indian Bank. So all three are buzzing off late, but expect QIPs in all the three companies, which is SW Solar, Indian Bank, as well as J&K Bank. The third is Piramal Pharma. There was a large block, nearly 60 lakh shares got changed hands in a block deal today. In terms of buyer, I understand a domestic mutual fund was a buyer in today's block, and an FI was a seller, so disclosures could be interesting there. And the last one is SpiceJet. Big move in that stock and on large volumes as well. Remember, the board meeting is scheduled today for a fundraising. I understand some large market investors, including a US-based fund, is likely to invest in SpiceJet. So that's the reason why SpiceJet is buzzing in trade today.
Is interesting. Large US-based fund as an investor in SpiceJet. I mean, by the way, we should tag it to the BSE, the stock price, SpiceJet. I think the last I checked, it was some 10-11% higher. Yeah, there you go. It's about 66. Anything else you can tell us, Nimesh?
So it's going to be a large dilution is what I understand. So the market cap of SpiceJet is around 4,000 crores. The buzz on the street is maybe they'll raise between 1,200 to 1,500 crores, which would mean more than 20% dilution. So that's one part, that the dilution is going to be quite high. And in terms of investors, I understand it's going to be a clutch of investors who are going to invest money. So it's not a single buyer or one or two buyers, but there are going to be a clutch of investors. And within that, one large US-based fund is what I understand is going to be an anchor investor in that book. So I think that's the reason why the stock is expected. Some big names are likely to put money in SpiceJet. So it'll be a validation that there is some bit of liquidity now for the company to survive.
All right, Nimesh, thanks a lot for joining us and giving us all of those details. One day post his birthday, and he's on the ball with all the details. Nimesh, the 18th birthday year in CNBC-TV18. Wish you the very, very best. And, fantastic year coming up. I don't think I know anyone in business news who is more on the ball than Nimesh over the last many years. So have a good evening, Nimesh.
Thank you, Nigel.
Well, let's move on.